The Indian bullion industry has already lost over 2,200 crores in the first 3 days of its protest against the hike in customs duty. This is as per various reports that they have been compiling. The impact of the strike can be felt across the board. On the MCX, the gold prices have declined, while jewelers also have shut shop across the country. Traders have now extended the strike to Wednesday, and we spoke to Rajesh Mehta of Rajesh Exports, and this is what he had to say.
There is a difference of about 5% between the international price and the Indian price today, because 4% is the customs duty, 1% is the excise duty. So there is a difference of 5%. 5% is good enough to lure any smuggler or any parallel marketeer to get the gold in illegal channels into India. So by this move, neither the government is going to benefit nor the imports are going to come down, but the sufferer is going to be the consumer, and the sufferers are going to be the organized industry or people who want to do legitimate business. So I appeal to the government through your channel, I appeal to the finance minister through your channel, that this central excise duty and the enhancement of the customs duty on gold must be rolled back, must be reduced. Otherwise the industry is going to suffer and the Indian economy is also going to suffer.
All right, that's the view coming in from the industry. Remember, we have been getting you all those views from last 3 days. Let's also get in Prithviraj Kothari. He's MD of Riddhi Siddhi Bullion. He also is president of Bombay Bullion Association, and he joins us on a Mumbai phone line. Mr. Kothari, hi, welcome to the show. The protest, of course, has intensified. You have increased the days here as well. But do you think government really is listening and they would roll this back?
Well, we are all requesting the same question. So we have to reduce the customs duty over 4%. If you see the total entire 4 plus 1 plus 0.30 plus 1, it means it's come 6.3%. It's a too high. If you see in the 1 kilo, almost 150,000, 1,50,000 rupees difference between the international Dubai price and India price.
Mr. Kothari, the reactions that have come in from CBEC, they say that the duty will not be rolled back. The impact is marginal, just 90 rupees per 10 grams. So, do you think they would actually react on this?
Listen, if it's 4%, it's okay. It's a sideline. If it's smuggling is happened, then we talk to the FM finance minister or maybe in the prime minister. But if it's in the 0.3% is the excise, and 1% is TCS. It's a true headache for each and every small jeweler, big jewelers, and each and everyone. Either it's a manufacturer, a small manufacturer, the industry, everyone has got effect on this excise. For anyone, an officer can enter the premises, they can check. So it's a true headache to each and every jeweler. They are doing the business. So get some relief. So we requested always, if you want to 0.3% excise, you add on a customs duty, you add on a flat charges that we can pay it. If you 0.3%, so we have to each and everything should be there. So I requested FM to at least, because each and every jewelers are trying to say the same thing in the last 3 days. The same thing. Everything should happen. Then they ask the question, no. If it's a last from 1% to 2%, the duty increase, no one can say they reduce the duty, but smuggling can be happen. But now it's each and every state, every city, they have the same voice.
Yes, Mr. Kothari, we have been speaking to various cities and states as well, and various jewelers and market participants here. The strike, of course, now jewelers also have started participating into this. It's going on till Wednesday as well. What are your expectations if the government does not roll it back, if they do cut it also? Do you see those kind of steps coming in from the finance minister?
No, if it's the same thing happen, I think so. It's the first year, I think should be 35% or maybe 40% of imports should be dropped down. And it's not a drop down for Indian demand. It's a drop down because of the smuggling illegal channels are inside the market. If you see the imported jewelry inside in the whole jeweler shop, the small manufacturers are lose their job, unemployment is huge because the Indian jewelry and the international jewelry, there is a huge rate difference between. We try to say, finance minister, that you listen one thing. What happens is, it's a 6.3%, it's not a small amount.
Sure. Mr. Kothari, of course, the impact would come across industry. What kind of impact would it come in for the buyers? How much extra will they have to shell out?
So listen, if in the bill, if we write down the rate, then the rate, then the rate, and after that excise, and then TCS. So you have to pay 1.3% extra.
All right, Mr. Kothari, we'll let you go at that. Thank you so much for joining us. That's the view coming in from the Bombay Bullion President. Of course, the intensification that we have seen over the protests is just spreading around, and they have increased the protest or the days for that for next couple of days as well. Time to get in our experts as well and get their views on commodities and this matter as well. Joining me in the studio is Vijay Bhambani. He is CEO, BSPLindia.com, and Dharmesh Bhatia is Associate VP, Kotak Commodities. Vijay, what is your reaction on this? I mean, this is the biggest thing that has come in. There have been textile protests as well, but gold really has taken it on the storm.
That's right, Manisha. I think this does dampen the scenario of India's dominance in the international gold import markets, and I think our share might just go down in the international sweepstakes. And I think in the near term, this agitation by the Bullion Association, I'm so sorry, is likely to impact trade at least in the absolute near term. And you would see some amount of price decline in the absolute near term, but I do hope that this is sorted out in the next week or two, because this could actually, like the previous two guests also said, lead to a lot of money actually going in through the off the books and parallel economy.
Dharmesh, let me get you in this as well. Gold prices have seen a bit of a decline in last couple of sessions. Do you see, what is your strategy? How are you playing up gold right now?
In fact, you have seen the price, definitely it will go further down. I'm expecting the price already, international price already fallen till $1,600. I'm expecting below that, maybe 1575 is the level which I'm expecting. And I don't think so, okay, government will back out this thing, because the main consumption is of India is, like gold is currently very high. The consumption is really going on. The fiscal deficit has gone very high because of this. That's the reason why government has taken this step, and I don't think so they will back out this, and it will continue. Maybe some marginal thing will be plus minus, but overall sentiment will be there that they will deficit for this. So short term, maybe sell side will be the better strategy for gold.
How about silver, Vijay? Because that is something that has continued to decline as well. Yesterday was a slightly better day, but then yet again today it hasn't been a very commodity friendly day, so as to say.
Absolutely, Manisha. We were talking about 57,000 yesterday on the show as being a level to watch. And sure enough, give or take 100, 150 rupees from there, silver bounded up and went up by more than 1%. But today it's appearing lethargic. It's over 1% down, and it's staying below the 57,000 levels comfortably. So my guess is possibly it's like to see 1% or 2 decline. The 55,750 to 55,900 band is what I would watch out for as a near-term support. If that holds, I think this is a routine correction, failing which the bulls might just be pushed onto the ropes.
Okay, so sell calls coming in for gold and silver. But Dharmesh, how about the base metal prices? Because the Chinese data in the recent days has not been supportive. Do you think that would continue to weigh?
Yes, definitely, especially base metal, the king of base metal, that's copper, is already holding around below 8,000 level in LME, and I'm expecting price to slide down maybe below 7,000 also, maybe in days or so. Domestic price is holding around 430, 435 level, but it's overbought. I'm expecting price to correct, maybe 420, 421 is the level, maybe short to medium term price will stabilize at that level. So shorting on copper at higher levels will be advisable.
You have been bullish on aluminum in the recent days, Vijay. Do you still see some strength holding there?
In terms of relative comparison, yes, but in terms of absolute peer view, I think base metals are under pressure. And I've been talking about aluminium being strong only as long as it manages to keep its head above the 112.5 mark, which it is not. It's currently well below the 112 levels, and therefore I do feel sluggishness coming in here. Should the bears actually manage to keep the price subdued below 110, I do feel aluminium could also see deep cuts. I would agree with Dharmesh about copper, so that could actually be a bellwether sentiment yardstick for base metals, if you will. If copper declines below 425 levels, I think it could drag aluminium with it.
Okay. And how about the energy space, Dharmesh? How are you playing the crude prices? Because those have been holding quite steady in the recent days.
Crude definitely is holding about the main psychological level of $100 internationally, and if you have seen NYMEX and the WTI, and if you have seen the Brent crude, the gap is like playing a very crucial role. And the more the gap swings, I'm expecting the domestic price to go up. With rupee concern also, rupee is holding above 50 odd level. This will push the domestic price. Maybe 5500 is a level which I'm expecting with very short term. So buying on crude on dips is still advisable. Maybe above that, market can even touch $120 in the coming days. So buying is still advisable.
All right, Dharmesh, we'll let you go at that. So that's the view coming in from Kotak Commodities. They are selling into gold and copper but buying into crude for the intraday market today.